Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, we're starting the show at the day's low for the Nifty. We have come off 170 points from the day's high. Earnings which are trickling in, but most importantly, whatever is happening globally is something which is impacting markets.
Good afternoon, Sonal. You're absolutely right. So much uncertainty in terms of tariff, earnings not as well or as good as what the street was anticipating. All of this clearly taking a toll as far as the markets are concerned. But we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Rising tension on trade between US and India hurts sentiment. Oil and gas, pharma and realty are the big drags, while auto and consumer durables are in the green. Mid-caps drag.
Angel One is in focus post-July business update. Company's client acquisition remains strong and market share rises. Client base up nearly 2% compared to June.
Butterfly Gandhimathi reports a strong margin expansion and revenue growth despite a challenging environment in the first quarter. The stock rises 7%.
Siemens Energy gains after reporting numbers for the quarter ended June 2025. The company reports strong revenue growth driven by power transmission segment, while EBITDA margin improves to 19.1%. Okay, all right. Those are the top headlines for the Nifty. The headline is that it is at the day's low currently. So is the Sensex right now. So we have come around 140 points off the day's high, below the 24,600 mark, and a lot of compensants which are contributing to that. In fact, for now, it's only Nifty Auto which is in the green right now. But apart from that, if you look at something like a pharma index, realty index, FMCG, IT, all of them in the red, and those are the major reasons for that drag on the Nifty as well. Yesterday, banking index kept Nifty in check. Today as well, it's down 0.6%, but bigger cut coming in from mid-caps, and that's exactly what we'll talk about.
That's right. So Hormuz is standing by the wall. A lot of earnings, Hormuz. Lot of stocks in the broad end of the market that are making all the moves. So which are the stocks on your radar? This is our special segment, Midcap Buzz.
It keeps you going, doesn't it? The midcap index at the lowest point of the day as well. We start off with some of the top gainers, if you can call it that. We're starting off on a little contrarian note on the broader markets today. We start off with stocks that are gaining in today's trading session. And there are the stocks of the likes of MGL and the kinds that are doing well in today's session, bucking the trend. But of course, the focus is on the earnings reactions. We saw numbers from Exide just a few minutes ago. We saw numbers from Triveni Turbine, because of which the stock trades at the lowest point of the day as well. Numbers from Eris Life Sciences came just a few minutes earlier. So a lot of these earnings reactions, mid-cap pharma names are starting to report numbers as well. Take a look at Anup Engineering as well. That stock was down almost 3% after its results, seeing a bit of recovery from the lows of the day. Now, some of the other movers in today's session include the likes of the other stocks that are doing well, or the stocks that are doing well on the volumes front. The textile stocks, though, they are not doing well. Gokaldas Exports is one of them, 8% lower on that stock. Look at Wellspun Living and SP Apparel, that too not having a very good day at the office. So not good going for textile names. On the volumes front, though, there are stocks that are doing well. Look at Prakash Industries. Butterfly Gandhimathi is something that you guys just highlighted, and Jai Bharat Maruti is a result reaction as well, 3% higher on that stock. And even today, there are some names that are at a 52-week high, maybe off the highs of the day, but take a look at JK Cement, take a look at CSB Bank and Datamatics. Those are some of the stocks that are at a 52-week high. Back to you guys.
Okay, all right. Thank you so much, Hormuz, for joining in with those names. Let's welcome Shrikant Chauhan now from Kotak Securities for a technical check on the markets. Shrikant, good afternoon. The question, of course, is what's the next important level to watch out for on the Nifty? Which will we see lower lows from these levels?
Good afternoon, Sonal. Good afternoon, Vivek. As far as Nifty is concerned, the next level to watch out for would be 25,450. And above this level, the market has spent a lot of time, close to 3 months. And now we are seeing gradual decline towards those levels. At these levels, if we see the market breadth, then it is very poor. And also, if we consider the today's formation, based on option statistics, then supports have shifted again back to 24,500 to 450 levels. So broadly, I am of the view that the market is going to remain in a range. At the same time, at 24,500 450 levels, the market is having excellent support. From there, again, we can expect a recovery because the fall is quite gradual. Means it has taken a lot of time to reach these levels. So in case if we see the market is dropping below these levels, then also I'm not seeing the market to sustain below these levels so easily. So rebound is definite. But yes, because of the news flow, because of the overall uncertainties in the world markets, in terms of news flow, I think the market is finding difficulties to sustain at higher levels. So till the market is not crossing 24,800, we are going to see range bound sort of activity in this market. That's my view.
Okay, Shrikant, and within this very volatile trading session, any picks for our viewers?
Yeah, Vivek, see, there are a number of stocks which are doing really well. They are managing, they are holding above their important support levels and crossing important resistance level. Specifically, if we consider Radico Khitan, then it is consistently holding the series of higher top, higher bottom. Currently, it is around 2875. It was around some 1,000 levels few months back. From there, all the way, it is at 3,000, but the overall momentum is still intact. And it is clearly indicating us that in case if there is any correction, let's say close to 2750 or 2800 levels, there we should look for adding this stock more. But even at this level, it looks quite attractive. I am expecting this stock to move towards 3,500 levels, which will take some time. But in the near term, at least we can see the levels of 3150. That's my view. The other stock on which we are bullish is from the diagnostic space, and that is Lalpath Lab. Here also, if we consider the technical pattern of the stock, then it is into strong pullback mode. It is on the verge of crossing its previous high of 3550. Currently, it is around 3200. But in the near future, I am of the view that the way there is a buying interest for the stock, it is going to cross this level. So at this level also, it's a buy around 3200. We can expect at least 3350 in the near term. But in the medium term, the stock may even cross the level of 3500.
All right, take that point. Thank you, Shrikant. Dr. Lalpath Labs is at the day's high as we speak. With that, we'll slip into a short break. When we come back, management of Mindspace REIT will join in to discuss their Q1 numbers and the outlook. Welcome back. You're still tuned into Midcap Radar. Mindspace REIT, that's the stock on our radar, reported their Q1 numbers, saw revenue surge by 18% on a YY basis. EBITDA was up 22% as well. Gross leasing, which is an important metric to track, was up 55% in the same period. Ramesh Nair, who's the MD and CEO at Mindspace REIT, is joining us now to discuss more and, most importantly, the outlook going forward. Ramesh, good afternoon. Thank you so much for joining in. Well, leasing this time around at 1.7 million square feet has been strong, a 55% uptick that you saw. What's the target for FY26? You saw good growth in FY25 as well. Will you surpass that, do better than that?
Thanks, Sonal and Vivek. Our gross leasing last quarter was 1.7 million square feet. Revenues went up around 21%. Our occupancy today stands at 93.7%. We hope to take this to 95% by the end of this financial year. Our NOI is up 24% year on year last quarter, and distributions are up 18%. Now, why is all this happening? The market has been outstanding, phenomenal market conditions. Every quarter, we are seeing market breaking new records despite the global uncertainties. During that 3-4 weeks, when there was those big tariff wars and the India-Pakistan issue, those 3-4 weeks, we had seen a little bit of a slowdown in decision making. But in spite of that, this quarter, the overall market posted very, very good record numbers. Net absorption for H1 calendar year, again, it's an all-time high. Net absorption up 28%. Gross absorption, again, up 18%. Vacancy levels, we're talking of around 14.5%, down from around 17%. So all market conditions kind of looking at a good market for people like us.
And what's the outlook for leasing in FY26? You did 7.6 million square feet in FY25. Same number in FY26?
See, the leasing numbers were big for last year, mainly because we also had a lot of stock coming up. We had the data center pre-leasing, which we did, which is close to 1.1 million square feet. We had the R2 building in Pune, which was 1 million square feet, which is pre-leased to a global capability center. We had the B1 building in Hyderabad, which is 1.5 million square feet, which was again pre-leased to a big global banking GCC. So we need to have that stock to keep going up that way in terms of gross and net leasing.
Understood. So you mentioned, Ramesh, that stock needs to keep going up. So currently, what is the kind of occupancies that you're seeing across the portfolio? Any significant trends that you're seeing either geographically or sector-wise? And end of FY26, where do you expect that number to be?
So in terms of under construction, we have our B8 building in Hyderabad, which is around 1.7 million square feet. A lot of interest in that. Hyderabad market has gone through the roof. Rentals, which 1.5 years back were in the early 70s, has gone to mid to late 90s already. So that's an opportunity. We will start construction in Airoli for our B15 and B17 buildings very soon. We also have a B18 building in Hyderabad, which we are hoping to start construction soon. So as an experience center, again, 150,000 square feet. This is a big club facility which we're doing in Hyderabad, which is expected to be completed in the next 2 months. So multiple things happening on the under construction capex side.
Okay. You're talking about under construction capex. What about the SEZ portfolio? How much of the portfolio has been denotified, and what kind of occupancies are you seeing in that particular portfolio?
So as he said, we've converted around 2.3 million square feet. In that 2.3 million square feet, we've already leased around 1.6 million square feet. That's played in our favor. In a park like our Airoli West Mindspace Park, which we call Gigaplex, vacancies pre the demarcation rules used to be 72%. That's now become 92%. Overall, our Airoli parks, which used to have an occupancy of around 75%, is now become 85%. So we've been big beneficiaries of that demarcation laws. Today, government has been highly supportive. The paperwork is easy. You can get your space demarcated in as much as 45 days these days.
So when it comes to new capacity addition, Ramesh, are you waiting for this entire process to go through, or are you already have a strong capex plan underway? Which are the geographies that you're targeted? And in terms of the portfolio, end of FY26 and FY27, where do you expect to be?
So in terms of capex plan over the next 3-4 years, the spend is going to be close to 4,200 crores. This year, of that 4,200, we would be spending around 1,200 crores on capex and around 200 crores on upgrades. Growth is going to happen both organically and inorganically. Like I mentioned, redevelopment, which we are already doing, B1, B8 in Hyderabad, that's happening. Data centers, we are putting up close to 1 million square feet again in Navi Mumbai. With that, our data center portfolio would be 5 data centers, so 3 under construction and 2 already operational. From a growth perspective, on an organic point of view, there's close to 7 million square feet, which is either under construction or development pipeline. We have close to 2 million square feet vacant area, which is spread out across the country, which we need to lease. We also get mark-to-market rental growth and contractual escalations, which happen. Inorganically, our sponsor has close to 18 million square feet, a lot of which we have ROFOs on. So acquisitions from the sponsor group would be a big growth driver for us. We're constantly looking for third-party acquisitions. We just did one, 800,000 square feet in Hyderabad Financial District. And we also look at consolidation within our parks, wherein smaller spaces available, which landlords want to sell, we end up acquiring it. So many strategies at play for both growing organically and inorganically.
Got it. Got it. Thank you so much, Ramesh, for joining in. Always a pleasure speaking with you. Thank you for telling us about Mindspace plans going forward and a lot more. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that.
Welcome back to Midcap Radar. Well, earlier today, our colleague Nimesh had highlighted a particular report. This was on the power OEM, the power space. the wind energy as well as solar energy space. This particular report was from UBS and it was a standard brokerage report of the day. So what exactly is UPS saying as far as the power as well as the power OEM space is concerned? Number one, they have an anti-consensus positive view on the entire space. They believe that there's an upcycle ahead and the advantage most likely will be with the incumbent leaders. So which are the names that they've initiated coverage on? Number one is BHEL, the second one is Waaree, Premier Energy as well as Suzlon. Thermax, they've retained the buy stance and they've raised the target price to 5,100 rupees a share. On UBS, what is it that they believe? They believe that the rising thermal addition is something that bodes quite well for BHEL. Remember, BHEL almost has a moat when it comes to building thermal power plants in India. So they anticipate that net profits could rise up to 8x by FY28. On Premier Energy, remember, solar cell module manufacturing company, ahead of peers as far as backward integration and integrated expansion is concerned. They believe that the company's 10 gigawatt backward integrated capacity could drive 34 to 36% top line as well as EBITDA CAGR between FY25 to FY28. Waaree Energies, the thesis is quite similar. Both of them, remember, are in a similar space. They believe that they expect close to 620 basis points of EBITDA margin expansion between FY25 to FY28. On the other hand, when it comes to Suzlon, they believe that this wind turbine generator manufacturer is something that continues to have sector tailwinds as well as a competitive edge that they believe will lead to significant earnings growth. They expect annual deliveries for Suzlon to rise from 1.5 gigawatt in FY25 to close to 4.2 gigawatt by FY28, translating to a 46% EBITDA CAGR from FY25 to FY28. Overall, an anti-consensus positive view is what UBS has on the entire power space. But moving on, some more movers. Remember, Triveni Turbine 2 is from this particular space, but that stock is seeing a muted or negative reaction in trade following its Q1 earnings. Vamakshi joins in with more details.
Well, Vivek, Triveni Turbine is absolutely slammed in trade today after the company reported a weak set of numbers in this first quarter of FY26. The revenue saw a decline of almost 20%, and this decline is largely being led by the domestic sales, which are down almost 24%. Exports were down too, but down only 15% on a year-on-year basis. We've also seen that their gross margins have expanded only marginally by 32 basis points to 52.17%, but their EBITDA margins have taken a knock of almost 81 basis points, given the kind of growth we've seen in their employee benefit expenses, which rose by almost 14% on a year-on-year basis. The EBITDA is down 23%, and the net profit too is seeing a cut of almost 20%. But what's leading to this sort of muted performance or weak performance from the company is the way the geopolitical uncertainties played out in the first quarter. The dispatches as well as the orders were delayed and pushed into subsequent quarters because some of the customers, the international customers, did not travel for the inspections. Apart from that, the ordering activity this time around was also very weak. Order inflows stood at 536 odd crores. This is a downtick of almost 16%, and most of this, the growth is being led by the exports business. Remember that Q1 FY25 was, there was a high base as far as exports are concerned. And this time around as well, despite that, they have highlighted that there was lower demand across products as well as aftermarkets. Now, the domestic business too, on the other hand, saw an uptick of almost 32% in the order inflow. There was some commentary that came in from the management as well, and they say that the quarter's performance fell short of their own expectations. However, they are taking efforts to realign operations, and they believe that the company can maintain its growth trajectory going forward. But nevertheless, weak set of numbers, order inflow weak, and therefore the stock is down and out in trade today.
Thank you so much, Vamakshi. Muted execution, muted order inflow, ensuring that this particular stock remains under pressure today. Well, a couple of other stocks on the radar. Have a look at Naukri or InfoEdge. That particular stock has seen quite a bit of a fall from the day's highest point. That stock trading near the day's lowest points. A couple of auto ancillary companies have recovered quite smartly. Have a look at Uno Minda, that particular auto ancillary company, trading near the day's highest point. Sona Comstar 2, that particular stock, has recovered quite sharply. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.